It is great to have you back here at Coin Lady channel. Here in this video, we'll examine Ripple and XRP in greater detail. Also covered, their position in the cryptocurrency market, current difficulties, and potential future prospects based on current trends. I am excited to share some news with you before we go into the crypto ocean. Unexpectedly, XRP is now more popular in search results than Ethereum. This could be because of the recent price spike, as well as the hope for a favorable decision in the Ripple SEC case. A change in the crypto dynamics may be on the horizon, as this enormous development may indicate. We will now jump right into the first significant story. The Naira, Nigeria's national currency, has recently been prohibited by Coinbase, Nance, and Kraken, which is some major news coming out of the country. Please think about subscribing if you haven't already so you may be abreast of all the newest news in the XRP world. Please tell us in the comments if you are already a dedicated subscriber and hit the like button. In this week's Ripple and XRP news, what has piqued your interest the most? Your feedback is much appreciated. Keep watching. Recent developments in Nigeria have further brought attention to the worries of central bankers and authorities. Major cryptocurrency exchanges, like as Coinbase, Finance, and Kraken, have lately had access to the African nation prohibited. The decision is made at a time when the Naira, the currency of Nigeria, has hit new lows compared to the dollar. The action, according to some experts, is an extreme measure used in an effort to preserve the Naira's value and stop the outflow of funds from the country. Crypto aficionados, however, have argued that the move is ill-advised and will have negative consequences. They claim that cryptocurrency gives Nigerians a means to safeguard their money and gain access to banking services that are out of reach for them. The action by Nigeria exemplifies the friction between crypto and more conventional forms of banking. While some view cryptocurrencies with suspicion, proponents of financial inclusion point to them as a way to reach previously unbanked communities and expand access to banking services. The action by Nigeria exemplifies the friction between crypto and more conventional forms of banking. Hardware wallets, not exchanges, are the way to go for storing cryptocurrency, as this move makes abundantly evident. The entire cryptocurrency sector was shaken in 2022 when FTX, a derivatives exchange, had a big crisis. An unexpected decline in Bitcoin's value triggered margin calls and forced liquidations, forcing FTX to temporarily close its doors. Since this revealed the vulnerabilities and risks of the Bitcoin derivatives market, many observers at the time considered it a watershed moment for the crypto industry. The derivatives market wasn't the only one hit hard by the FTX collapse either. Some industry insiders believe that regulators and anti-crypto politicians saw the FTX issue as an opportunity to impose strict regulations on the cryptocurrency market. His detractors claimed that FTX's demise demonstrated the risks of unchecked Bitcoin exchanges and gave authorities an excuse to crack down on the marketplace. Many believed that officials wanted to shame FTX into submission so that other cryptocurrency exchanges would learn their lesson from its demise. It was even implied that officials had allowed FTX to function freely, anticipating its collapse and using it as a pretext to crack down on the business. The fallout from the FTX collapse affected the whole cryptocurrency market. Authorities began to crack down on major exchanges like Coinbase, Binance, Kraken, and BitBuy, and some of them even went to court. As an example, the SEC is currently involved in a lawsuit involving Coinbase. And yet, Nance just settled with authorities for $4 billion. Other exchanges have not yet been subject to the full force of regulatory examination, although Kraken has also been under investigation. Decentralized exchanges, which were considered as a means to evade regulatory supervision, were similarly affected by the FTX implosion. But even these deals have been under fire recently, with some participants in the loop facing charges of aiding criminal activity. Some cryptocurrency exchanges have decided to close their doors permanently or relocate to countries that are more lenient toward cryptocurrency trading as a result of the government's crackdown. Some cryptocurrency exchanges have reduced their services or gone out of business as a result, making it harder for individual investors to get their hands on bitcoins. Many are wondering why central bankers and regulators are so worried about digital currencies, given the heightened surveillance of cryptocurrencies and exchanges. Ultimately, the cryptocurrency industry is still quite tiny, with a total valuation of under $2 trillion. A factor contributing to the scrutiny is the exponential rise of the cryptocurrency sector. The market has risen at an exponential rate in the past few years, while it is still relatively little in comparison to more conventional financial markets. Central bankers and regulators are worried about the consequences and hazards of an uncontrolled market that is expanding quickly, so this has their attention. That cryptocurrencies may have an effect on more conventional banks is another factor drawing attention to them. Traditional financial institutions may witness a decline in their market share as the number of individuals using cryptocurrency as a payment or storage method increases. For those in charge of the money supply, the central bankers, this is a major cause for concern because they use it to keep prices stable and regulate inflation. There may be risks and instability if cryptocurrency were to become widely used as a payment method because it would make the central bank's control over the money supply more difficult. What lies ahead for Ripple and XRP is anybody's guess, given how the crypto sector is always changing. Ripple has worked with big banks, but it has also been the target of lawsuits filed by both investors and government agencies. The fact that Ripple is linked to XRP is one of the biggest problems it faces. Despite Ripple's claims that XRP is not a security and is distinct from the firm, several investors have gone to court asserting that this is not the case. Significant ramifications for Ripple and the crypto sector as a whole may result from the conclusion of these litigation. There may be more regulatory oversight and less opportunities for Ripple to form partnerships with banks if XRP is classified as a security. Still, Ripple has high hopes for its technology and its potential impact on the banking sector in the years to come. On-demand liquidity is a new product that the company has introduced recently. It will help with XRP cross-border payments. Already, numerous big banks have shown interest in the offering, such as MoneyGram and SBI Holdings. But the future of the crypto industry's regulation, the result of legal disputes, and ripple effects will determine its success or failure. Finally, the cryptocurrency community is still very interested in and divided over Ripple and XRP. Despite their revolutionary potential, they encounter formidable obstacles from both investors and regulators in the realm of cross-border payments and financial services. Legal disputes and the crypto industry's regulatory environment are two of many variables that will determine Ripple and XRP's future, but they will certainly continue to spark controversy and discussion for a long time to come as the cryptocurrency industry develops and expands. Please note that the information presented in this video is meant to be educational in nature and should not be construed as investment advice. Well, that concludes our video. Kindly subscribe to my channel and leave a comment with your opinions in the space below. Goodbye for now.